from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, shares of Zoom plunge almost 17%. It's been a lifeline for workers, students, friends, and family through the pandemic. But with workplaces and schools reopening, what will Zoom's new normal be? We'll ask Zoom CFO Kelly Steckelberg. Still, the return to work isn't happening for everyone just yet. Add Alphabet to the list of massive companies pushing that back to 2022. That's in addition to Amazon, Apple, Facebook, and so many more changing plans as the Delta variant takes its toll. We'll bring you the latest updates on how work is shifting. And wildfires continue to rage across the Pacific Northwest, with the Caldor fire quickly approaching California's Lake Tahoe. We'll tell you how firefighters are using AI and machine learning to fight these fires faster than ever before. We'll get to that in a moment, but first, it was another day of markets hovering around record highs. For more details, let's bring in our Ed Ludlow. Ed, what are you watching?
Yeah, market's really just taking a pause after that news from the Federal Reserve on Friday. No clear conviction or direction. The S&P 500 down a touch, 0.1%. Same for the tech-heavy NASDAQ 100. Valuations, of course, for the S&P 500 at their highest level since 2000. The thought process is what happens to those big-cap tech stocks as the Federal Reserve unwinds the stimulus that we saw from the pandemic. An area of outperformance, the NASDAQ Golden Dragon Index, mostly US-listed companies who have their business in China, up 3.9%. It's been choppy trading recently with all that commentary around China's regulatory crackdown. And with Bitcoin falling throughout Tuesday, we saw some pressure on the Bloomberg Galaxy Crypto Index. Very quickly, after hours move, we're looking at CrowdStrike reporting earnings after the bell. You can see the stock is down pretty significantly, 3.6%, despite the company upgrading its full year forecast on terms of its financials. Let's look at some of the biggest points movers of the day in terms of big cap tech stocks in the equities market. Apple down 0.8%. No real catalyst, but there was news, of course, about difficulty in producing the Apple Watch. And we'll cover that later in the show. And then CrowdStrike, as I said, snapping 9 straight days of gains going into earnings. This was its performance. Also weakness in some other stocks as well. Emily.
All right, Ed, thanks so much for that roundup. Now, of course, as Ed mentioned, Zoom shares taking a big tumble after the company gave a sales forecast that fell short of some analyst estimates, this raising concerns about how the video conferencing platform can maintain revenue growth as schools and businesses return to in-person operations. For more, I'm joined by Kelly Steckelberg, the CFO of Zoom. And look, life is far from normal. Still, the pandemic, Kelly, is dragging on. But investors are concerned given that, look, last year is going to be a tough comp forever for Zoom. So what is your message to investors today about where growth is going?
Hi, Emily. So to understand growth and how we're thinking about the future of Zoom, you have to understand that we really have 2 core segments of our business. So we have the upmarket and the direct part of our business, which is doing very well. There are lots, this is evidenced by many things we talked about on our call yesterday. First of all, we crossed over our first $1 billion quarter, and we had 54% year-over-year growth. We have lots of momentum in Zoom Phone, where we crossed over 2 million seats sold. And we also had a big upsell in a financial services company, which moved into now being our new largest customer. So very excited about the growth there. The headwinds that we're seeing, which is what you're seeing reflected in our rest of our year guidance, is in our mass market business. So this is an area that grew dramatically during the pandemic. Pre-pandemic, it was about 20% of our revenue. In Q2, it comprised 36% of our revenue. And this is a segment of our business, or our customers, I should say, where people are starting to move around the world again, where individuals and small business owners are traveling. They took some time off over the summer. Hopefully many of you are moving around the world and being able to socialize in person and doing in-person happy hours and dinners rather than doing them over Zoom. And that's where we're seeing the headwinds and the slight contraction that's now reflected in our guidance.
So, look, I know you've been on the phone with investors all day, including Kathy Wood, whose ARK has a big stake in Zoom. What does normal then look like for Zoom? What is your outlook for new normal and how much people will be using Zoom on a regular basis when, normal, if we could call it that, operations return for a sustainable period of time around the world?
Yeah, so, as you just prompted, companies like Google are delaying their back to work. And this is what we're hearing from many of our upmarket customers. And that means we're seeing really strong growth in our renewals. So we have a front weighted in the year renewals seasonality. We saw very strong performance around that in Q1. And we saw that continue in Q2. We also are seeing companies that are thinking about, okay, what's it going to look like when we go back to work? And they're really preparing for a hybrid work approach. And so what that means is an opportunity for Zoom Rooms, our conference room solution, because you need that technology in the office to make it work the way that it does today and to really have a great experience. So we actually saw attach rates for Zoom Rooms double from Q1 to Q2. So we're excited about the potential there, as well as Zoom Phone, which is really doing well. And that's what we're really focused on for the long-term strategy of the company. In June, we also, I'm sorry.
Well, speaking of long-term strategy, you just made a huge acquisition in Five9, $14.7 billion, cloud-based customer software maker. Are we going to see you make more big bets like this, big buys to build out what Zoom can offer?
So we're really in that critical transition phase. We're moving from being a meetings company to a platform company. And, I just talked about the products that comprise that: Rooms, Meetings, Phone. And the contact center is a really important part of the extension into the platform. And that's why we're excited about the potential of Five9 joining the Zoom family. And we will continue to look for other opportunities to extend the platform. Zoom Apps is another great example of that. We have 50 new Zoom apps in the marketplace today. And these are where third-party apps are really bringing that experience into your Zoom meeting. And that really extends the way that you can work and use the platform every day.
So Facebook, meantime, just unveiled some interesting new virtual reality features, VR workrooms, if you will. They think this is the future of not just video calls, but meetings. What do you think about that, and how is Zoom thinking about virtual reality? Do you consider what Facebook is doing here competition?
We don't consider that really competition. We look at opportunities for virtual reality. We always like to see how people are innovating around this space. But we have worked with other virtual reality companies and extended through AI, for example, also in things like surgery trainings. People are using virtual reality to do that over Zoom. And it's really exciting to see, especially in these times where everybody is working more remotely, how you can extend the capability of the platform and what you can do in a virtual reality situation like that.
You are adding some new features like gesture-activated reactions for the iPod. So if someone raises their hand or does a thumbs up, that icon, as I understand it, will show up in the screen. Talk to us about that and more features like that we can expect to come.
Yeah, so the goal that Eric has always had for Zoom is to make Zoom meetings even more effective and better than an in-person meeting. And I think you've already seen that happen in terms of efficiency. And we use AI for things like transcription and to-do lists. The things that are missing is what you're highlighting, is like, how do you turn into natural gestures into an action that gets taken in the meeting? And then the one that we always talk about is like, how do you give somebody a virtual hug? Or even like the smell of someone's coffee if you're sitting across the room from them, that you get experience. And we're constantly thinking about ways to bring those interactions or experiences into the meeting so you feel like you're even closer to that person that you're talking to.
All right, Zoom CFO Kelly Steckelberg, always appreciate you joining us every quarter to chart the progress and tell us about where Zoom is going. Kelly, thank you so much for joining us. Meantime, jury selection has begun in the trial of Theranos founder Elizabeth Holmes at a San Jose court. She faces up to 20 years in prison on charges of defrauding investors and patients over her failed blood testing startup. The company and Holmes claimed Theranos could run an array of tests from just a tiny amount of blood. Holmes's lawyers will argue that she suffered a decade-long campaign of psychological abuse at the hands of Sunny Balwani, the company's president and her former romantic partner. Opening statements are expected next week. Coming up, Apple facing possible delays over the production of one of its newest devices. We'll find out why next with our very own Mark Gurman. This is Bloomberg. South Korea has become the first country to force Apple and Google to open up their app stores to other payment systems. The move could potentially set a precedent for their operations in other countries. Both tech giants currently face a raft of legislative measures here in the U.S. over their power to dictate terms on app marketplaces, including the exclusion of alternative payments handlers. Apple responded to the Korean ruling by saying it undermines privacy protections and puts users at greater risk of fraud. And Apple may need to delay the release of its newest smartwatch due to production issues. Sources have told Bloomberg that the manufacturer is facing challenges over the device's new design. For more, we're joined by our very own Mark Gurman. So, Mark, what issues is the Apple Watch actually facing here?
So my colleague Debbie Wu and I were hearing that there are 11th hour or late in the game production issues related to the new screen inside of the new Apple Watches. As I wrote last week, the big upgrade this year is going to be slightly bigger screens. Right now they're in 40 and 44 millimeter configurations. These will be going to 41 and 45 millimeter. There'll be some interface updates to allow that for that larger screen. But it has caused some production headaches related to a new material, a new layer that they're putting below the cover glass to bring the actual display component closer to the screen so it looks much clearer, you have a much nicer picture. So they're working through that right now. The questions I have are, how is this going to impact consumers? Does this mean the delay is going to result in a further out announcement? Is it going to mean more supply constraints? What's the big picture here?
All right, well, we'll keep posted for your reporting on that. Meantime, you had an exclusive scoop out over the last 24 hours that Apple is considering adding satellite capabilities to the iPhone that could be used in emergency situations. I can tell you as a mom, definitely had those moments where you're in the middle of nowhere and you think to yourself, what if something happened right now? What would we do? How would we get help? What exactly are you hearing?
Emily, that's exactly what this is. This is not turning your phone into, a Michael Douglas Wall Street satellite phone to call in stock trades. This is a feature specifically for emergency situations. So there's two components here. The first one is called emergency messaging over satellite. What this will do is if you are in an area with no cellular coverage and you're able to connect to a satellite, it's not going to be available in all countries, of course, you will be able to send short emergency text messages to your emergency contacts, whether that's your parents, your family, your doctor, etc., or to emergency response services. The second feature is more all-encompassing. This is a mechanism to report an actual SOS emergency, whether you're in a plane crash, in the middle of the ocean with a boat crash, a car crash on a mountain. The worst case scenarios you can possibly be in or think of on this planet, that's what this solution is for, to call for search and rescue. And so it's going to be interesting to see how Apple rolls this out and how they position it. But I think this would give the iPhone a leg up for a certain array of users who are in those situations more frequently.
Interesting. Absolutely. Okay, Mark Gurman, thanks so much for that update and great scoop from you there. Okay, coming up, as wildfires continue to destroy large swaths of Northern California, we're going to take a look at how satellites and AI are playing a crucial role in fighting the new normal for the Pacific Northwest, a devastating and potentially deadly new fire season year after year. That is next. This is Bloomberg. Firefighters are continuing to battle flames that are pushing closer to Lake Tahoe in Northern California. The Caldor fire has been burning since August 14th, destroying more than 187,000 acres and sending thousands of people fleeing after evacuation orders were put in place. For the latest, I'm joined by Mark Chediak, who's covering the story for Bloomberg News. Mark, give us the update. What's the latest here, and just how big is this fire going to get?
Hi, Emily. Thanks for having me on. Yes, so as of this morning, the fire was about 3 miles south of South Lake Tahoe, which is the resort town that borders the southern edge of the lake. And fire officials I spoke to this morning were quite concerned that the fire could spread into the city today. There is a forecast for very gusty winds and dry conditions, and that forecast extends through tomorrow. So they've got a real battle on their hands. The main concern here is that the winds could blow embers into the city and start spot fires that could then turn into their own blazes and then burn through the town. But so far there is no report of any fire burning in South Lake Tahoe City itself.
So at this point, what's the likelihood the fire will get to South Lake Tahoe? I mean, that, of course, is the main concern.
Yes, it is. And it's hard, CAL FIRE officials have not been able to say or give an estimate of their ability to keep the fire out. They have a whole army of crews stationed throughout the city and throughout the southern part of the resort area, trying to keep the flames at bay. So it's very much touch and go, and it's kind of a wait-and-see situation. So far today, they've been able to keep the fire out of the outskirts of the city where there are houses and cabins, so that's been a good sign.
All right, Mark Chediak reporting on what's happening at the front lines today. Mark, thank you so much for that update. Now, one of the biggest issues facing firefighters is knowing where the flames will head next. The Department of Energy's Pacific Northwest National Laboratory has developed a system that incorporates satellite imaging, artificial intelligence, and machine learning to detect wildfires early and predict the path they will take. For more, I'm joined by Neil Oman, Senior Technical Advisor of Data Science and also the Product Manager for Radar Fire, this new technologically advanced system. So, Neil, thank you so much for joining us. As I understand it, traditionally, firefighters are flying over blazes at night, drawing maps of where the flames are, and then using that in the morning to determine where to fight the fire. How would your technology change that process?
Yeah, so Emily, you're correct that today there's an interagency fire center that dispatches planes to gather these infrared images overnight, and they do human analyst drawings, and they feed not so much hand drawn but computer aided drawn maps to incident commanders. And the challenge is always for incident commanders is to know where is the fire right now, right, and where is it going in the next hour to 2 hours or 3 hours, and almost as importantly, you heard Mark mention spot fires. Where are the spot fires, and how fast can I know that spot fires are jumping out of the fire into whether it's into infrastructure or just into another part of the forest, right? The faster I can get to those spot fires, the more I can handle the damage, right? So what we've tried to do here is take higher resolution with this system, which is in a prototype production state and is starting to be used by the Forest Service for some of their selected and more advanced incident commanders, is take satellite imagery from a variety of satellites, public access, open access satellites, that's higher resolution than most of the geosynchronous satellites in use for weather and what have you today, and feed the data coming from those satellites into some algorithms, into some machine learning trained models that pulls out where is the fire right now, gets better, faster, higher frequency observation of where the fire is. And in the future, use that information also, that higher frequency input information to predict where it might go, including additional information about weather, wind, as Mark said, and other features, fuel conditions, and what have you.
So in the future, could you tell us, thanks to this technology, with relatively great certainty, whether the fire will get to Lake Tahoe or not?
So within a certain time envelope, Likely that it's a little bit like predicting the weather, right? So the weather predictions today are pretty good for let's say 72 hours out. Beyond that, it's a little bit speculative. Same problem here, right? So predicting where the fire is going to go for the next couple, 3, 4, maybe 8 to 10 hours, probably very possible within a decent bound of certainty. Beyond that, it's harder to say. But that still gives people potentially gives people a better warning as to, hey, this fire really is going to get to your city boundary. You either need to set up a protective line or think about evacuations quicker.
Now, when you're looking at the map of just California, I mean, there are something like 100 fires happening at any given time. Of course, we're dealing with climate change. That's the huge challenge. But when it comes to resources, why can't we seem to get these fires under control fast enough?
Well, so that's clearly the challenge, right? Regardless of the cause, the scale of the firefighting problem now in the last several years actually has dramatically increased. And they just don't have the resources in terms of both aircraft to fly fires or firefighters to fight them to get to them all necessarily. So the question is can we scale the observational capabilities and the predictive capabilities up? And this system aims at doing that so that we can take a look at the whole western United States using these satellites, which don't have, I don't have to put aircraft in the air. They're already up there. They're bringing data as often as they fly over, and that's an important aspect. As often as they fly over, we can get data from them for spotting these fires and giving the ground crews information about where they are and potentially where they're going to go.
Now, this technology is being used in actually all kinds of natural disasters, from floods to hurricanes, and in fact is being used right now in the response to Hurricane Ida to, as I understand it, assess the damage. How exactly is it helping there?
Yeah, that's correct. So I work with a team of researchers led by a person by the name of Andre Coleman, who they are right now. You would be talking to Andre probably, since I'm the project manager and he's the principal investigator. They are currently involved in extracting similar information for flood extent, road closures, and more specifically, because this is a Department of Energy program, what is the damage to critical infrastructure? So there are 1 million people out of power in Louisiana at the moment, and the question is where is the electrical grid damaged such that we can send crews there to fix that damage, repair it as quickly as possible, get people back online. So right now they're taking similar kinds of satellite imagery. Storm has passed, clouds are cleared, starting to clear. You can take the satellite imagery and you can do these kinds of damage assessment, critical infrastructure, damage assessment and flood extent, what roads are closed, how do you get to the damaged infrastructure and what have you, using the same technology in terms of that. I mean, different algorithms and different approaches, but roughly the same basic idea in terms of the technology.
Fascinating. Well, I'm so glad to hear this technology is out there and becoming more widely available. Neil Oman, technical advisor at the Pacific Northwest National Laboratory. Thank you so much for joining us, and good luck out there. Coming up, move over AWS, Microsoft, and Google. There's more and more cloud startups taken to the skies. We're going to get the 360-degree view with Greylock partner Jerry Chen next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's get back to the financial markets, where our own Ed Ludlow taking a look at the money pouring into Chinese hardware startups. Ed, what's the story there?
Yeah, it's really interesting, in the narrative around China clamping down on internet companies. Chinese hardware startups seem to be the place to put money. If you look at the money that's flowed into, this is data from PitchBook, $5.6 billion flowing into China hardware startups in the first 6 months of the year, already eclipsing the whole for 2020. And we also see this kind of illustrated in the public markets as well. If you come into my Bloomberg terminal, we can see that the MSCI Asia Pacific Index IT for IT stocks has actually outperformed drastically the communication sector, because as we know, the communication sector includes names like Tencent, some of the targets for the Chinese regulatory crackdown that see outflows go into it. If you come back to me into the studio as well, what's really interesting is that overall the volume of venture capital flowing into China still pretty significant. $56 billion in the first half of this year. We hit $75 billion throughout the total of 2020. So, we talked a lot recently about investor concern about companies in China, but if you look to the private markets, there does seem to be a lot of opportunity there. Emily.
All right, Ed, thanks so much for that update. Meantime, as cloud computing continues to push boundaries, most customers are still turning to the big three: Amazon, Microsoft, and Google. But the market for new cloud startups remains hot, with opportunities abounding. Venture capital firm Greylock just came out with a new report looking at all things cloud called Castles in the Cloud. Jerry Chen, partner at Greylock, joins us now with more. So, Jerry, what are the castles and what are the up-and-coming castles in the cloud right now?
The Castles project started, Emily, with a question like, how can you beat Amazon, Google, and Azure in the cloud game? Because they seem to be so huge and have so much revenue. Is there room for startups? Is there room for VCs to keep investing in these markets? And we've seen companies like Databricks, that's going to be on their show later, raise huge amounts of money and compete successfully head-to-head against Amazon, Google, and Azure in kind of the Spark ecosystem. So you look at companies like Databricks, Snowflake, Elastic, security companies like Snyk. There's a ton of companies out there that are able to either do something like compete head-to-head against Amazon and something like databases, or do something like multi-cloud like HashiCorp across Azure, Google, and Amazon, obviously. So a couple of different ways to play it. Either choose a market or choose a strategy.
I'm actually going to be interviewing the CEO of Databricks right after you, Jerry. So thanks so much for the layup. When it comes to the big incumbents, Amazon, Google, Microsoft, do you see the likelihood of real disruption there? One of them potentially being unseated or dethroned, if you will, to use the metaphor?
To dethrone the castle metaphor, I don't see a fourth or fifth hyperscale cloud provider anytime soon. Clearly, in other geographies like Asia, Ali Cloud and other vendors will have local prominence. But in terms of these hyperscale clouds, the big three are pretty much entrenched. And I think you might have fourth or fifth cloud providers, Oracle, DigitalOcean, et cetera. But I think the next generation of clouds will look very different. Either A, you're looking at decentralized. So there's a bunch of talk about kind of blockchain and Web3, so decentralized clouds. I think two, vertical clouds, financial services, gaming, healthcare, so focused niches for clouds. Or third is like the edge. I think this whole decentralized edge computing could be a trend as well. So companies like Cloudflare or Fastly do very well at the edge with their own network. And Cato Networks, a company in the Greylock portfolio, does a similar approach, pushing compute to the edge closer to the end users. So I don't see a centralized hyperscale cloud coming anytime soon, but there's certain ways to play against the big three in different strategies.
So when it comes to where Greylock is placing its bets, where do you think the money's at? Where do you think the most innovation is going to come from when you look at startups that are navigating this new world or disrupting this world?
Yeah, I think there's either two plays, like I said, Emily. Either A, you pick a market that's super interesting. An example, we're betting on a company called Chronosphere that's in the observability market. So we've heard of companies like Datadog or Splunk around measuring your applications. Chronosphere is one of these plays that goes head-to-head against the existing leaders like Datadog, but also against the large cloud vendors and their offerings. The second thing, we're looking at deep IP. So clearly the cloud vendors have huge reach, huge scale, and tons of dollars and developer attention. But if you can build something that's kind of deep IP, hard technology, you can actually crack the moat, if you will. So I think Databricks and Snowflake have done a great job in kind of the real-time, the database space. But the move towards real-time analytics, and you've seen companies like Confluent that monetize Kafka, or another company in the Greylock portfolio called Rockset, kind of real-time analytics. So you'll see companies taking an approach saying, hey, where is a great market like observability? Or where's an area I can build really hard IP and have a technology advantage? And I still believe, or maybe some old-fashioned, Emily, if you have deep IP, you can still win against the big Davids out there. The big Goliaths out there, if you're little David.
Now, the cloud is obviously huge and getting bigger, in part because of remote work, the trend toward hybrid work, the fact that more companies will be working in the office and at home, potentially, forever. I'm really curious how you think this is going to change Silicon Valley for the long term. I've spoken to your partner, Reid Hoffman, about how, over the last 18 months, you guys have been doing some deals where you're never meeting the entrepreneur in person because that's just how it was. Now we're seeing all of these huge companies pushing back their returns to work. Apple, Google, Facebook, Amazon, all now 2022. I spoke to venture capitalist Bill Gurley about how he thinks this is going to change Silicon Valley for good. Take a quick listen to what Bill had to say.
The competitive pressure to not go back amongst engineering is huge, and so I don't think anyone's going to be able to mandate it other than a very small company.
So he's basically saying almost any company won't be able to get engineers back in the office. Would you agree with that? And what does that mean going forward?
I think it'd be a mix. I think you'll see a category companies still have a strong headquarter culture. I think with the CEOs back in the office, people want to be around the CEO or the founders. But, for sure, there's going to be a large percentage of the workforce, Emily, that will not want to go back to office. And I think what happens is the skills that you need to succeed as developer or a product manager for the new workforce is very different. So before, maybe in-person communication was a skill to have. Now, written communication, asynchronous communication, video communication, that becomes more powerful. So before, maybe a great PowerPoint presenter was rewarded for his ability or her ability to communicate. Now you can write grid memos, communicate via Slack, and communicate through other tools. That's going to be a better skill to have. And so I think the new workforce is going to basically learn on a new set of tools. So we learned on like email and Microsoft Office. The new workforce is going to be on Slack, on Zoom, on a whole set of tools that are going to be key to their day-to-day job. So I think, there'll be a cadre of folks back in the office, Emily, but I think there'll be a generation of folks that don't come in, and the skills you need to succeed in that workforce look slightly different than the skills you have today.
Interesting. Brave New World. Jerry Chen, partner at Greylock. Good to have you back, Jerry. Thanks so much for taking the time. Okay, coming up. Speaking of high-flying cloud startups, data and AI company Databricks just raised new funds at a $38 billion valuation. The company partners with all three cloud giants. We're going to ask about plans to go public and the Databrick road ahead. This is Bloomberg. Databricks is a data analytics platform powered by artificial intelligence. It's also just announced it's raised $1.6 billion, valuing the company at a whopping $38 billion. Joining us now, Databricks CEO Ali Ghodsi. Ali, thank you so much for joining us. So look, the numbers are huge. Why are you still a private company? Why not go public now?
Yeah, we kind of see this as going public 6 months at a time, right? So we're allocating big blocks to the investors that are going to invest in us for many, many years to come. In January, we raised $1 billion. That's reshaping our cap table to have the big mutual funds then. And now in this round, we're super excited to have the round be led by Morgan Stanley. So in some sense, it's kind of like a small IPO at the time, and we will be public at some point. But this is sort of something that's really advantageous to us to do in this way.
So you were last on the show to talk about that $1 billion you raised earlier this year, now $1.6 billion. At what point are you not going to be able to do this privately? What could you do as a public company you wouldn't be able to do privately, and vice versa?
Yeah, look, the main reason to go public is to provide liquidity to the employees, right? And that is top of mind for us. So for that reason, we will at some point IPO. But it's really nice to be able to actually sort of spread out the kind of allocation of capital to the company in sort of chunks like this. So we're taking advantage of that.
So when you're saying you're doing this to supercharge innovation, what does that mean? How do you put this money to work?
Yeah, we're expanding super aggressively, right? So we announced that we're going to actually open up a site now in Germany for R&D. So doubling down on Germany. We already have our Amsterdam site. Here we have San Francisco, we have South Bay. We also announced now with this fundraise that we're also going to start a site in Seattle. So a lot of it is going to go to R&D, but also go to market. Each of these countries, we have 20 offices worldwide, each of them to make sure that they're staffed up, that your product is localized to the language locally, that you can do support in the language and their time zone. It's costly. You can take 10 years make profits and reinvest it back into business to do that. Or if you have a lot of access to capital like we have, you can supercharge that and just do that extremely fast. And that's what we're opting for doing.
Now, we were just talking with Greylock's Jerry Chen about the castles in the cloud, if you will, the giants, Amazon, Google, Microsoft that are there, and the startups that are disrupting that hierarchy. You partner with Amazon, Google, and Microsoft. Do you see one of them or a couple being disrupted longer term, or do you see them generally holding down the fort and data cloud startups like Databricks sort of widening out the pie?
Yeah, I actually think that, these cloud vendors, they're here to stay. They're all growing at insane rates and the numbers are large, right? And still growing really fast. So I think it's just, with IT all moving from on-premise to the cloud, we're at the beginning of it. So I think all three will do well. Some will do better in some areas, others will do better in others. But there is an interesting trend that's happening right now, which is more and more software companies or enterprises are saying, which one should I pick of these three? I don't want to maybe pick. Let me actually hedge my bets. I'm going to actually have my software work on multiple of the clouds. So multi-cloud is becoming a secular trend with lots of tailwinds for companies like Databricks and others that are multi-cloud. So that's, I think, something that you're going to see more and more and more of, because they don't want to, risk it and pick the wrong cloud. Also, they want to have negotiation leverage because, it can be pretty costly to spend all these, money on infrastructure. So if you have multiple vendors that you can, negotiate with, that's better for you as an enterprise.
Interesting. Well, speaking of multiple vendors, I know that companies can use both Databricks and Snowflake's products and services, but you also compete with Snowflake. Some of your products actually overlap. What do you think makes Databricks stand out from Snowflake? Why would you choose Databricks over Snowflake?
Yeah, look, I think Snowflake is a great company and the numbers speak for themselves. It's fantastic. It's a data warehouse in the cloud. It's a multi-cloud data warehouse, one of the best out there. Databricks is different. Databricks is a data and AI company. It actually enables you to build what we call the lake house, the data lake house, where you can store all of your data. You can do machine learning on it, which you wouldn't use a data warehouse for. So that's a differentiator. You can do real time on it, which you typically don't use data warehouses for. And you can also do more and more data warehousing on it. So in the really long term, let's say in the next decade or so, I actually think the data warehouses will kind of be replaced and wither, and they will be replaced by these data lake houses.
So you think a company like Salesforce and the way they do business is going to be replaced by the way you do business?
Snowflake, no, I think that the companies out there, they're going to readjust, right? It's a big enough market. It's the same thing as your question about which cloud vendor is going to win. All three are successful. I think there's a big enough market for Snowflake to be around, for Databricks to be around, and also, frankly, other players that we haven't heard of yet. Jerry mentioned some in the previous, interview that you just did. Some of them will succeed as well. But I don't think there will be a place for the data warehouse as it is today. I think that needs to, either be revamped to a data lake house, or they need to do something with it. I don't think it, makes sense to have it around in the long term.
Give us a sense of your revenue and growth projections over the years to come. My former colleague Eric Newcomer reported in his newsletter, you're looking at somewhere between $600 and $700 million in revenue. Is that on target, and what's next?
Yeah, we shared that we've passed 600 million ARR, annual recurring revenue, and that growth rate is above 75% year over year. So, that's really, really fast growth rate. And also, I think we should remember we're in the really early innings of artificial intelligence and machine learning. We're just scratching the surface. Most enterprises are not where, say, a Google or a Facebook or a Twitter is, but they will be in 10 years. So I think, the growth potential here is massive. It's going to go on for a long period of time. Mark Andreessen famously said that software is eating the world. You have software in your phone, in your thermostat, in your car. Well, I think AI is going to eat all of software. Wherever you have software, you need more intelligence and more AI and more data processing. And we are, a company that actually combines data and AI. So I think we're very well positioned here.
All right, AI is going to eat the software. We'll leave our audience with that. Databricks CEO Ali Ghodsi, thank you so much for joining us, and congrats on a big round. Okay, South Korea's largest online payment system, Kakao Pay, has lowered its targeted IPO offering to $1.3 billion. Regulators are asking the startup to revise its prospectus after questioning tech valuations and comparisons with its peers overseas. Even so, South Korea has been enjoying an IPO boom driven by a retail frenzy that's fueled $14 billion in first-time share sales this year. And the company behind the unofficial footwear of Silicon Valley, Allbirds, has filed for an IPO. The direct-to-consumer sustainable shoe manufacturer listed the size of its offering as $100 million. Bloomberg previously reported Allbirds is seeking a $2 billion valuation. The filing said net revenue for the first half was up 27% year on year, but the net loss widened to $21 million from $9.5 million in the same period. All right, coming up, the pandemic may have accelerated our use of technology, but tech company workers are still not back in the office. Google pushing back its return to work date yet again as COVID cases continue to surge. That's next. Meantime, shares of Virgin Galactic rocketed Tuesday after Jefferies started covering the stock. It's closed up almost 9%, but climbed to 12% earlier, hitting the highest level in nearly 3 weeks. The analyst cited the company's attractive outlook, with additional spaceships driving up capacity to 660 flights a year from 36 today. Don't forget, one of those flights this year carried the company's founder, Richard Branson himself. This is Bloomberg. Google has joined a growing list of tech companies delaying its return to the office until 2022. No specific date has been given, but in a memo to staff, Alphabet CEO Sundar Pichai said it's just optional to work on campus until at least January 10th. Alphabet says it'll give 30 days notice before all employees are expected back. Google's decision mirrors several other tech companies, Apple, Amazon, Facebook. All of them have pushed back their return dates to 2022. For more, we're joined by our Bloomberg City Lab reporter, Sarah Holder. And Google, Sarah, actually late to the game here, given that the other big tech companies have already announced this, but not a surprise. I'm sure this is giving managers, executives a lot of headaches about how to navigate this as the pandemic drags on. Do we know what drove this decision in particular?
Absolutely. I mean, it seems like a lot of companies are looking to peers in the space to determine their back to office decisions and their timelines. You know, Google already pushed back its return to office plan till October and now has pushed it back again, added vaccine mandates. And so, I mean, Google was always one of the office cultures that other tech companies look to, the massage tables, the napping pods. And now with this return to office pushback, other companies might be looking to Google again and saying, you know, we want to compete for staff, we want to compete for engineers. If people don't want to go back to the office yet, they might be looking to a company like Google.
So, you know, of course, you know, we've been talking throughout the show about how, you know, some venture capitalists are saying that they won't be able to mandate engineers coming back to the office at all because the competition for talent is so fierce. If one company's offering remote work and another isn't, you know who's going to win and who's going to lose in that equation. What does it mean for, you know, metropolises, for the city of San Francisco, the city of New York, which, you know, have to be honest, been lagging, given that workers just don't have to be here right now?
Absolutely. I was speaking with folks who work for BART, the public transit system, the city comptroller's office here in San Francisco in June and July, and they were really excited for the September return. They felt that commuters would be coming back on the rails, small businesses would have more clients. But right now we're seeing reports from the SF Comptroller's office that a lot of that growth that they had expected is stalling. You know, bridge traffic across the Golden Gate Bridge is up to, you know, 90% of pre-pandemic levels, but BART is still depressed to, you know, under 20%. Castle, which tracks office swipes, San Francisco is one of the lowest of the 10 cities it tracks, but all cities, including New York, are down in recent months. Small business owners are seeming less optimistic about the return to office and what that means for their clientele.
Now, when workers do eventually go back to the office, whether it's in January or after that, what can they expect to see?
It seems like a lot of companies have been spending the pandemic thinking about their physical office space, even as people aren't going into the office, and especially as people aren't going into the office. You know, when people go back to Google's campus, for example, maybe in January or even later, they'll find a physical workspace reimagined. Google has been looking at ways to create more meeting rooms so people in the office and out of the office can connect. They're building more outside meeting spaces. But a lot of companies have shed office space entirely, but Google is one of those that actually has been investing in real estate. It has plans to extend and expand in San Jose, an 80-acre campus with 20,000 employees down the line. So it'll be interesting to see who and what the office will look like when people actually do end up coming back.
Well, and there's a big question that you just raised too, is what happens to the commercial real estate market. The investor Bill Gurley said he thinks something big is going to happen. He's not quite sure what, but you've got Coinbase, for example, which gave up its San Francisco headquarters altogether, and other companies doing the same.
Yeah, a lot of employers like Twitter, Salesforce, I think Airbnb have been putting up office space for lease, and so hoping that other subtenants will come in and pick up that office space. But it's been hard to find takers right now. And it seems like in surveys of employers and employees, like you were saying earlier, like it doesn't seem like people necessarily want to come back in the same force. Already Google has I think, receive 10,000 applications to work hybrid or to change locations. So everything will change in terms of how many people even want to be in these office spaces, which might mean a switch up in who's occupying downtown San Francisco especially, but already New York.
Right, we've seen a massive population redistribution over the last 18 months. We wonder how much of that will be permanent, how much it will continue. Bloomberg City Lab reporter Sarah Holder, thanks so much for giving us that interesting view into what's going on. And that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We're going to be speaking earnings with CrowdStrike CEO George Kurtz. Plus, we're going to be joined by Russ Glass from Headspace Health, talking about the mental health crisis across the country, and Cece Morkin of Ginger to talk about their merger and the road ahead. I'm Emily Chang in San Francisco. This is Bloomberg Technology on Bloomberg Television. This is Bloomberg.